I have to say, this is a all-star lineup for a day three. It's almost an embarrassment of riches to have in 35 minutes. But I'm going to ask all 6 of you to be extremely direct with your interventions. Let's go through the first 2 rounds of the questions. And then I'd like to have you interact with each other in terms of points that are raised and the challenges that I laid out in my opening remarks about 2023. It's almost like we're staring down the barrel of a shotgun and not knowing what it's going to be offering to us. I'm wondering if I can here, engineers, how the role of the EXIM banks in this crisis, because the lending that you're doing is extremely important in Saudi Arabia, of course, but internationally to some of the more vulnerable markets as well. So you want to be able to provide that lending, of course, but then in a climate which gets more difficult, how do you measure risk versus reward? And I think that's going to be a common theme for the panelists here. Do you want to start, Saad, with that?
Thank you, John. Good morning. Good to see you back here in Riyadh, and good morning to the audience this morning. It's a pleasure to be here and participate in the FII 6th editions. ECA and EXIM banks are development banks, development financial institutions, and an integral part of global financial systems, where they are strategic partner to the commercial institutions, financial institutions, supporting them in their credit offering and mitigating financial risk in cross-border transaction and long-tenor transaction. This is exactly to the point that you have mentioned, where how we support as a development financial institutions, commercial financial institutions, and customer in continue investing in the economy, especially in the infrastructure and global trading. To give some colors on the size what ECAs and EXIM banks provide on annual basis. The Bern Union, which is made of over 80 ECA and EXIM representing 60 countries around the world, they provide financing and financing cover of 13% of a global trade on annual basis. That's equivalent or a little bit less of the trade passing through Red Sea on annual basis. So that's the amount of size of financing that we provide as entities. We in Saudi EXIMs, our main objectives to ensure that no Saudi export cross-border transaction fails due to lack of insurance or financing.
Oh, very interesting. So I want to try to take this opportunity, because we're looking towards the future, Charles, on how much banking is going to change. But now, 12 years after the crisis was evolved into a global financial crisis, and the work that Wells did, for example, to deal with it, how bad do you see 2023? We saw the results from Meta, and the market started to panic. And I always look at the technology companies as lead indicators, of course, right, because of the order books for digital advertising. And does it have to be such a shock to rein in inflation? Do you want to see if we can look towards the future if we have such a turbulent 2023? Do you want to tackle that for me?
Yeah, I think we have to separate out what we're actually seeing in our results versus what we're all concerned about, especially in the U.S. when you've got the Federal Reserve being very clear the direction of travel. We see extraordinary strength across our consumer businesses and our corporate businesses of all sizes. We see a little bit of stress in those with less affluence and those who are in industries that are particularly inflation affected, but it's really a very, very small piece of the overall customer base that we see. So what we're all concerned about and what we think is inevitable is very, very different than what we're seeing. So we sit here today and we're pretty confident the next couple of quarters will continue to be extremely strong. And beyond that is where we, get concerned about the effects of the continued significant rises in interest rates and effect on housing markets and things like that. I think from our point of view, our hope is that this is the measured impact that people will be able to work through, because the known direction of travel will help to ease the strain that they'll see. It's possible that the significant changes and the cumulative impact of that can have a much bigger impact, as well as the course of geopolitical events, which could certainly change everything. But we just have to separate what we see in the markets versus what we see in the real economy. And today, the markets are appropriately incredibly nervous, but the real economy is still particularly strong.
Okay. Very quickly, due to the financial crisis, do you find that, take it from your market, of course, with your international bank, but is the American banking system much more fit for purpose to manage this recession? Because it's so extraordinary, as you said, with the geopolitical shock, number one. You have inflation that we haven't seen since we were probably in high school and in university, which is extraordinary. Huge stimulus at the start of the Biden administration, which others in Europe followed through with. But are the institutions able to withstand this kind of hurricane that could hit?
Oh, I think the answer is no question. The institutions are so much stronger today than they were pre-financial crisis. And it's not just capital levels. We all talk about capital levels going from 6, 7, 8% to 10, 11, 12, 13%, and for some institutions still heading higher, which we're all able to achieve and still continue to support the marketplace. But when you look at the quality of the assets on our books, when you look at the way we've underwritten mortgages, the way we're underwriting commercial loans, the documentation, the credit standards are much, much different today than they were pre-crisis. And the real question that we get concerned about is some of those things are still being done, they're just being done outside of the banking system. And so the question is, what ultimate impact can that have on the broader financial system? But the banks per se are still just in really great shape.
It's good. It's excellent to get your kind of temperature of how the U.S. banking system is viewed as we have it today. Let's get to the center of our discussion here, and that's the transformation in banking. Tong joins us from Hong Kong with the Bank of China International, which has also had a significant role here in Saudi Arabia with Aramco, which I hope to ask you about afterwards. But what are the trends that are here to say? Do you think, for example, the influence of cryptocurrencies and consumer banking, more digital banking, what are the major trends you're looking at from the Bank of China on the international branch, of course, that are here to say, would you suggest?
Okay, great. Thanks, Jiang. Thanks for your question. Allow me to say hello to our Arabian friends here. I just learned a greeting word, Assalamu alaikum. Good morning, everyone. I'm not sure the pronunciation is correct.
I think that was pretty good. I mean, I've been coming here for 30 years. I don't speak Arabic, but it sounded correct. Am I right?
That's very good.
Okay.
Thank you. And I'm very honored to be here again. And this is my 6th FII. So from the very beginning up to now. So it's an amazing FII journey. I very much enjoy it. And back to Zhang's question, with increasing popularity of mobile internet technology and the rapid growth of financial self-media industry, so more and more individual investors have been tapping into capital market with lower transaction cost and higher information availability through various online platforms. So I see as a trend is inevitable, and I tend to view the impact of this trend in the long run would be positive, as it will boost the market transparency and also enrich the source of household investment. Thus, in the long run, will benefit the economic growth.
Okay, thanks very much. We'll circle back again on some of the other issues we talked about yesterday in terms of the Bank of China and the collaboration between West Asia and East Asia, if I can put it that way. Does that make sense? But they're obvious partners because of the export relationship and natural resources. Now the relationship's much deeper beyond oil. Dame Susan Rice, I think it's excellent as a former central banker to have you on this panel. And GEFI is the Global Ethical Finance Initiative. I think it'd be great if you can pick up on where Charles left off in terms of resilience in the banking system today. He kind of gave us a temperature check of the U.S. banking system. I'd love to pose what we saw a dozen years ago and how we've evolved in banking today, and then the level of disruption that's taking place with digital banking and cryptocurrencies and regulation into those new instruments as well. Please.
Thank you. That's a big question. Let me say...
We know you have the expertise, so give it a whack.
Let me say, first of all, I was nodding as Charles was speaking, because what you said about the US banks, I would also say about UK banks. The resilience, the testing of difficult scenarios, sometimes out to 100 years. I mean, extraordinarily challenging requirements for a bank, and the institutions are kept to these. So I feel, and I know lots of colleagues do, that the system is really quite strong. But however strong it is, that doesn't mean that something might come along, or several things come along, which we often think in linear ways, one problem, but there may be a number. So I think the resilience is there, and the desire to be resilient, because no one wants to go through what happened in the financial crisis. In terms of resilience, if I turn that on its head, you're asking about the institutions. We need to think about our customers as well. So I've run a bank, so I think always from the angle of the customers and the businesses. When the economy becomes very difficult and challenging, probably the most important thing for them and for our institutions, and I would sum it up in one word, is the word trust. If we can demonstrate that we understand the pressures and the issues of the customer, and they continue to trust us, that is really good. If they don't, they will turn to others who are less regulated, who are less experienced, who are less well financed, and they may well get into trouble, both businesses and people. So it's important that we keep our customers with us as institutions. That's an important factor. If I could just hop quickly, you mentioned crypto and digital banking and so forth. We're never going back to running to a branch to get some money. I mean, we're well past that. But if you think about the history of money, I mean, it started with what? With exchanges in kind, with cowrie shells, with gold, with precious metals, then it went to paper, then it went to plastic. In a way, crypto is another iteration there. And again, it's a matter of trust, that we have ways to protect customers from anything untoward that might happen to them. It's a really important thing to think about the customer and the impact that financial services will have on them, as well as the economy at the same time.
Can I follow up just quickly? I remember interviewing Christine Lagarde before she was at the ECB, so at her time at the International Monetary Fund, and it was 4 years ago, and she said, we're going to start moving into regulation of cryptocurrencies, and we see the dance taking place. When I file my taxes every year, the IRS is asking me which crypto assets I own, which are none, but nevertheless, they're trying to dabble and test the regulation. It's not evolving very fast when it comes to the new products in fintech, I don't think. What do you think?
No, as with all things, a lot of things are tried. There's a lot of resistance. Anything that is new is, just a bit wild at the beginning. And then often because there are problems, people recognize the need for regulation and start developing it. The better scenario would be that it happened ahead of time. And of course, good regulation that isn't too restrictive either on the institutions or on the customers is what will maintain that trust that I was talking about.
Good. You made a very interesting point that if there's not trust with the consumer, we have two very established banking names in the international banking on this panel here, and I'm going to circle back afterwards. I'm just going to finish the first round. But I would think that consumers and customers would trust more the institutions that have been around for so much time. But you're saying that the next generation of consumers is going to come in and may have a different view, Dame? Is that what you're suggesting?
They may be. I've spent a lot of my time working in what's called financial inclusion or exclusion, but working with populations with very little means to bring them into the banking system. But very often they fear that, they don't want to enter it, it doesn't work for them, and they're dealt with outside by other bodies which may not serve their needs as well.
Wow, so interesting. Thank you very much. François, where would you like to pick it up? I mean, Rothschilds is such a respected name in the world of boutique investment banking, I would suggest. Are you going to be prepared for radical disruption, or is investment banking stay almost the norm? What are the biggest trends that you're looking at to the theme of our subject matter this morning? Please.
Well, I think we are seeing, some dramatic changes in our industry, that's for sure. The volume of online and digital banking, has increased by more than 50% pre-COVID and post-COVID. So, by definition, the activity is moving online very quickly. It's also interesting for us to see that competition, there were in 2019 about 15,000, new startups in fintech. In 2021, this number rose to about 25,000. So the number of players in the system now have increased dramatically. And it will be very interesting to see how that will consolidate, because with this financial crisis, raising money or, are we going to have as many disruption or players, that will be able to entertain the disruption? That's a big question mark. I would expect, the traditional banks and the big banks to be able also to take advantage, from these trends by maybe trying to consolidate some of the market and trying to incorporate a lot of this financial innovation within their own products. The clients, using fintechs and digital systems, are still very much on basic products. When you need advice, when you need more sophistication around how you manage your saving, when you will end up, with models which will be, I guess, more balanced, more multi-channel. And so it's a big challenge, but it's also a big opportunity for the traditional banks, whether it's in retail banking, investment banking, asset management, to figure out, what kind of innovation has emerged from the digital environment, how to incorporate, how to compete. So I think the game is by far not being stabilized. And this crisis, which will maybe last, for some time, especially for the startups, will create opportunities for many people.
Good. From your vantage point today, though, looking at the Gen Xers and Gen Zers, what would be a Rothschilds in 15 years, do you think? Is the leadership giving that some thought of what a merchant bank does in the future?
Yes, quite a lot, because a lot of our business can be more digitalized and optimized, that's for sure. But I agree with Susan that our clients will change, the needs for advice will change, the new generation will step in, and we have a lot of question mark on our side of the business, how to attract young people, how to market clients going forward. The world is changing dramatically, so we need to adjust.
Good. Do you think this is a very interesting? I'd love to, Dr. Samer, to have you remind everybody the origins of Bank Leumi. I've been in this region off and on for 30 years and 10 years in Abu Dhabi, so I know the experience. But you're very keen also on addressing fintech, private equity, venture capital in this region, the wider region of Middle East and North Africa as well. It is taking hold. Most wouldn't think so outside, say, the UAE or Saudi Arabia. Do you want to give us a snapshot of what Bank Leumi is thinking?
Thank you. So, Assalamu alaikum. Good morning.
Are you trying to compete with our friends from Hong Kong in the right pronunciation? That's not even fair. You're a homegrown boy.
So it's a great pleasure and honor to be here. Thanks for having me. I think the entire banking system is going through significant evolution in general. And when you analyze the banking sector, you look at two evolutions. One is the technology and one is the business. And what you see now is the vast majority of the fintech and innovation is actually happening in the emerging markets in general and in the Middle East in particular. And that is the green field and a blue ocean for investment. If you look at, for example, Africa, you have the high-tech startups tripled to 5,200 between 2021, and half of that is from fintech. The economy here is thriving, and you have significant programs for 2030 well under execution. The GDP is growing. It's 12.2% here in Saudi, which is one of the highest in the world, with very low inflation, 3.1%. So there is a lot to do here from a GDP perspective, which is coupled with the banking industry. That together, when you look at the population that is growing with a high percentage of youth, tech savvy, you have a high penetration of mobile, about 100%, and there are a number of places that are unbanked or underbanked. So the potential here is huge. And it's becoming attracting the talent and the technology and the potential for what the technology is doing by microservices. So you can see that there's a lot of investment going on, and we want to tap into that kind of investment, whether it's in the payment side, whether it's in the retail side, whether it's in the cryptocurrency side, anything that we can leverage from the microservices and the cloud, we would love to do that.
Great. Okay, thanks very much. Now, I'd like to spend this round on the challenges we've seen. I talked about the global financial crisis with Charles, but the pace of extraordinary shocks. In my opening remarks, I was saying it's historical disruption, but it's also hysterical disruption. And I think every leader on this banking roundtable would say, if in business school or whatever training you had, if you had to deal with that much disruption over a period of a dozen years, you never would have dreamt of it, including once in a 100-year pandemic, the requirements to make sure your institution's fit for a recovery, and then if that wasn't enough, a shock of inflation and the potential for recession. So from the EXIM Bank's point, the role you had in COVID-19 and then the role you have in making sure the logistics and the connectivity that Saudi Arabia wants to have with Asia and Europe, and the key role as a logistics center for Africa. Can you look at the infrastructure challenge coming out of a COVID-19, would you say, Saad? It's incredible, is it not?
Thank you. That's a very complex question, first of all, John. You put everything in one question. I think the main mandate of EXIMs and ECAs,
just to clarify, ECAs for the audience.
It's export credit agencies.
Thanks.
Which is they provide facilities, development, financial institutions owned by government to support global trades and export activities. The main mandate is to support economy and flow of goods, trades, and infrastructure and long-term projects. So if there is any downturn in the economy, pandemic, geopolitical tension, climate change, or a significant hike of rates that we're seeing in a very short period of time, there is where ECAs, EXIM banks, has to step in and support the flow of trade and cross-border transactions. We were started in February 2020, exactly in the pandemic year, and since then we have approved over 20 billion Saudi riyal to support Saudi exporters. Some of the European ECAs during the same period witnessed 300% increase in the volume, despite of the slowness of the trade.
So you're saying they're very responsive to the...
They have to be very responsive. Asian ECAs saw 20 to 30% growth during the same period to cover the risk for financial institutions and customers during that period. Going to the second part of your question, being a logistic hub, Saudi Arabia announced the Global Resilient Logistic Initiative just last Sunday, which focusing on enabling global trade by utilizing Saudi capability, capacity, and location as a central hub. We have 1,200 kilometers of sea lines, 6 ports on the Red Sea, a lot of capacity and capability can support global trade and Africa. Africa, there is 1.3 billion people, a lot of natural resources. With the right sustainable financing to Africa, there will be a lot of benefit on a global level. I think I can end this following your instruction to be short and precise, that during uncertainty and doubts, customer, investors, and commercial financial institutions turn to ECAs and EXIMs for assurance.
Yeah, it's interesting. That resilience initiative is extraordinary because you launched the national industrialization strategy and then followed up with resilience. So I was suggesting that Vision 2030 was not a fixed document. It continues to expand, am I correct?
It continued to expand, and it was part of the core headlines of the Vision 2030 to make Saudi Arabia a logistic hub, central logistic hub to support the world. All the other strategies has to be made, so we have the roadmap for the future. We know what we're going to do. In the logistics strategy, the expected investment is 40 billion Saudi riyal in the next 3 years.
About $10 billion, yeah? 11 billion.
10 plus billion dollars in 3 years. That will require financing from financial institutions and ECS locally and globally.
Okay. Charles, let's go to my question here. Could you ever imagine in a span of 15 years of banking that you'd get that many challenges? It's extraordinary, the level of, I said, hysterical disruption. That's pretty much what it must feel like at a bank, no?
Yeah, it does. I think, I would say my experience always tells you that whatever time you're in, it always feels like the most complicated and the most disruptive versus what you saw in the past. So I'm not sure that what we're seeing today is different than what we saw in the 90s, the 80s, the 70s in terms of how the world changed. But this time of disruption in financial services, that is the new normal. And we're far from done in all of this. And you're right, if we think back to what's happened over the past 10 or 15 years, aside from the economic disruption, and you think about the rise of blockchain, crypto, direct lending, all of the things that, the technology companies entering financial services, the fintech community themselves. Sure, 10 or 15 years ago you said, that probably people would be surprised that it would be as significant as it is. But the landscape has not been, it's not clear who the winners and losers are. And so as we think about what the future looks like, this battle is just beginning. And there's going to be an incredible battle between the established financial institutions, the governments in some parts of the world as they figure out the role that they want to play, the fintech community, which I think is the most at risk in all this, and the technology players that have ecosystems that have the ability to figure out how broad they want to be because they own relationships. And I think that, just speaking parochially from the bank's standpoint, I think we've all learned a tremendous amount over the past 10 or 15 years. A lot of the things that have been created, yes, exist because of the opportunities, because of new technologies, but they also exist because banks just moved way too slowly in most parts of the world. And I think that we live in a different world today in terms of the bank's understanding of what they need to do, the vision of where things need to go, and the battle ultimately will play out between the banking space and the pure tech space, and that's the unknown in terms of where that winds up.
Can I just do a quick follow-up with you? I noticed when I went to my bank, and I don't have to mention which one, but it's one of the leading UK lenders. I live in London, and they had, because of law now, you have to list the quality of service and customer satisfaction. And of the top 5, 3 were new entrants in the last 10 years. And they're all internet banks to give you that sense of the relationship you were talking about. So does Wells Fargo adapt quick enough, in your view? Does it make acquisitions to fill that space perhaps where you're not as swift as a digital bank? How do you manage that? Because you're one of the biggest banks in the United States.
Yeah, I think there's no question that I think most of the big banks, the answer is no, have not reacted quickly enough. We've approached things in a way that works for us as opposed to the way things work for our customers, whether it's on the consumer side or the wholesale side. But again, I think that is the dramatic wake-up call that everyone has received. And I think to answer your question, I think, yes, there are things that we can either buy or companies we can partner with to change the quality of the capabilities and the quality of the interaction. But I think when you look at the financial institutions across the world, they're rethinking what their platforms look like, the way they were designed, and thinking about it much more from a customer-centric point of view as opposed to a bank-centric point of view.
Okay, very good. It's just such an interesting conversation. Tong Li, I think this audience would love to hear what the Chinese Hong Kong model is for innovation from the Bank of China. Charles talked about the US example. Saad was talking about the role of the EXIMs. What's the evolution of fintech, the speed at which China is moving in this space, and how is it going to reflect at the Bank of China, would you suggest, these new trends in fintech?
Okay, thank you. I would not address it in a theoretical way. I would like to take BOCI, my company, as an example. So BOCI is a leading broker for retail investors in Hong Kong stock market, and we believe financial institutions should accelerate operational innovation and transformation. So, you know, more and more individual investors I have already mentioned, so we need to pay closer attention to the growing pool of this group and explore ways to adapt it to the customers' new habits with the new technologies. So 3 years ago, we developed and launched a platform. This actually is an internet and digital technology-based application system for securities trading. So I named this system the Super Platform. The Super Platform served for providing our customers with continuous access to polls, trading, information, and social networking and other premium functions through online channels. You know, our feature is the employee stock ownership plans. The initial name is ESOP. So use our platform, we have covered more than 200 leading listed companies, mostly tech companies, including Tencent, Alibaba, which covers more than 100,000 executives and core employees. It's quite, you know, it's quite efficient and it's quite, you know, effective. In addition to centrally processing various business for customers, it also supports modular management and rapid iteration, and also provide agile response to new business needs, thereby bringing our customers a better experience. By leveraging this new platform, BOCI has enhanced our market competitiveness as leading player in stock trading and margin financing. So I would say BOCI is more than happy to assist the global individual investors to tap into Hong Kong markets through our super platform, sharing the tremendous opportunities of China's massive market.
Okay, thank you very much, Tong Li. We have 5 minutes to go, so we're going to have to be very focused on their last three answers, and I don't want to rush anybody. But I think, Dame Susan, it'd be good to have you address how GEFI can influence the future of investment banking, this ethical drive, because in some of the emerging markets, as Saad would probably know, you have to have these safeguards in place in lendings of the developing world, say Latin America, Africa, and some of the other markets trying to come to the fore. They're making major infrastructure investments. How do we know that they're soundproof, if you will? Please, Dame Susan.
Yes, thank you very much. So GEFI, the Global Ethical Finance Initiative, we partner with the UN and some major public and private bodies to focus on ethical finance and helping organizations find their way if we can. So we have a number of products and we convene a number of people and sort of have these conversations. One of the things that was going through my mind as I listened to fellow panelists is, and we think about this all the time at GEFI, that we here talk about East-West. That's how we think. I was brought up to think East-West.
Yes.
And that's what we do. In GEFI, we have a lot of conversation about North-South because the Northern Hemisphere, in general, has had the economic prosperity and growth to be able to advance in most countries and to move into the digital world and to be able to develop and deal with the challenges, but actually bring that digital finance to life and make it work. But if this conference is about the future of humanity, that's the word that is used.
Yes.
If we think about humanity, that's people everywhere in the world. And goodness, don't we have an obligation to think about what happens to those countries which have not moved at the same speed as we have and need to move now. Now, it's possible. Technology is wonderful because you can, even going to mobile phones, you don't start with 1G, you start with 4G in a country that hasn't had. So there are lots of ways to do this, but I think it's important to look at that through that other lens, and we at GEFI help lots of organizations do that. We have a platform for SDG products, and we vet those, done in conjunction with the UN. Launched that last year with Aegon, putting the first product up, and we have a lot of conversation about where finance needs to go and will go in the future. So I'll stop there.
Good. Thanks very much, Dame Susan. François and Dr. Samar, I'd like to have you finish if you can. I was looking at a number of the international pieces about the Davos in the desert, right? This is the 6th anniversary of the FII, so I'll keep my questions short. But it's quite extraordinary, the panel that I chaired yesterday on the Resilience Initiative and the level of co-investment that's coming from Saudi Arabia. Share from your different perspectives in a minute each, if you can, and I'm going to stick you to it if you can, please. The opportunity in Saudi Arabia, this is extraordinary transformation, well outside of hydrocarbons. First from Rothschilds and then Bank Leumi, please. François?
Yeah, no, we see the kingdom and has entered into a massive development and transformation plan. This is attracting a lot of new initiatives, new talents, and new players. So we are all very engaged, to follow that. But we're also very impressed, by the capacity to bring and deliver innovation here, and to be able to implement that at a very large scale.
Well, it's extraordinary, is it not? A lot of people don't believe it from the outside, but it is real. No?
Well, we've been participating and looking at that, for many years now, and I think that the standard and the quality of the development is is very impressive, and it's only the beginning. So I think that international investors, international players, will spend more and more time here, to try to understand, how it works and to participate.
Good, very good. Dr. Samar, for Bank Leumi, yeah?
Yeah. So as I mentioned, the opportunities are amazing, and the fintech industry in particular is on the rise. We see the economy is very healthy, unlike other economies around the world, and the prospects for the future are very positive, and they are on a fundamental basis. If you look at the regulations, which are very fundamental for the sector, for the banking in particular, the regulators are giving the tailwind to support the change, whether in the open banking that is supported by SAMA, or even open finance, cashless economy, and more technology on the go. And the population is adapting technology. You have a very advanced mobile technology. So all together coupled with the attraction of the capital, even at the seed level, which hasn't been there here in the past. Even at the seed level, you are getting a lot of capital here invested. So the opportunities are amazing.
Okay, thanks very much. I would like to go through all your names and titles again, but the red light is flashing. I just wanted to say, number one, I wanted to thank the Institute for a bit more time because they gave us an extra 10 minutes because we had 6 on the panel, and we used it wisely. And thank you for handling the diversity of questions across the board. I covered energy for 30 years for CNN, Tong Li, and I saw with interest what the Bank of China did to support the Saudi Aramco IPO, which has been pretty extraordinary in itself. And it kind of talks to you about the East-West relationship that Dame Susan was talking about, and now reaching into the South as a priority with Africa as a logistics hub. Can we give a nice round of applause? And I have closing remarks right afterwards. Thank you very, very much.
Thank you. Thank you, Joe.